Hi everyone, welcome to our channel where we help your real estate investments work harder for you. I'm Samantha from Elevate Realty in Toronto. Ever since the start of COVID, people started wanting more space and real estate outside of core Toronto has been blowing up. In the long run, Toronto is the best performer in the GTA, and we saw 9.8% in annual appreciation between 2011 and 2020. As a comparison, York Region had lower appreciation rates at 8%. Now, things have taken a turn once COVID hit. Toronto gained 1.3% over the past half year, which isn't so bad, but York Region had much higher short-term appreciation at 8.5%. I'm going to explain the reason for this, but before that, I just ask that you please subscribe to our channel so you don't miss other videos like this from our Elevate team. Now, let's recap the relationship between Toronto and the GTA. There's a trade-off between a lower cost of housing and proximity to the core. Living outside of the core means you have to take into account added costs for travel and the value of your time, so a property outside the core needs to be below a certain amount to make sense, and I'll call this our break-even price. Before COVID hit, this break-even price was typically calculated based on a 5-day commute to work. For example, if you live in York Region, let's say you value the added cost of travel and time at $40 a day. Based on a 20-day commute to work, this totals $800 per month in extra costs. If you live in the core, this money can actually go towards a higher monthly mortgage payment, and essentially an extra $800 a month translates to a property price that's $280,000 more. So based on this example, a property in York Region will only make sense if it's $280,000 less than a property in Toronto. Let's look at property prices right before COVID hit. In February 2020, the average detached home price in Toronto was $1.49 million, and in York Region, it was $1.21 million. So the difference was more or less $280,000. Now that people are working at home more, travel costs are minimal, location is less of an issue, and the need for more space becomes a higher priority. This is attracting more people to municipalities outside the core, which has caused the spike in their appreciation. The difference has narrowed to $197,000, and this is because people are factoring in a lower cost of travel, which is causing a sudden appreciation outside the core. The reality is that even after we recover from COVID, workplaces will most likely be more flexible with a work-from-home situation, and people might not have to go into work every day. I do believe this gap will permanently narrow, meaning properties outside the GTA will continue to go up quickly until a new break-even point is reached. I can't predict the future, so I can't say for sure what's going to happen, but I can tell you the facts. The gap between Toronto and York Region has reduced by 30% already. So if people will be going into the office 70% of the time moving forward once COVID recovers, then it's possible that we're close to that new break-even point, so we'll see price growth in York Region slow down soon. On the other hand, the gap between Toronto and Durham is $690,000, which is still a huge discount. So prices in Durham might see a more rapid appreciation until the price gap is narrowed even more. We're big believers in Toronto freeholds, and our view that core Toronto is the best long-term investment hasn't changed. Toronto freeholds have remained a very stable market during these uncertain times. People are wanting more space, so freeholds in general are getting more demand, although this demand is spread out between Toronto and the GTA. So basically, we're seeing a bit more demand than supply, which is why we're in a seller's market in Toronto with detached prices creeping up slowly. Ultimately, people choose Toronto because they like the city and it's the more preferable place to live overall. Once a new break-even point is reached in areas outside the GTA, those areas will become less attractive and buyers will get redirected back into Toronto. In other words, because the demand for freeholds in Toronto are lower now compared to what we anticipate it being in the near future, it's a more balanced market now and a good place to be in as a buyer. Once the GTA reaches a new break-even point, the demand in Toronto will likely grow, which means higher rates of appreciation in Toronto. And once COVID takes a full recovery with immigration bouncing back, this brings even more demand into Toronto, and these people's preferences will also be to live in Toronto. So if your strategy is to buy and hold for the long term, buying in Toronto will give you the best returns on investment on a long-term basis. If you want to learn more about real estate investment opportunities in Toronto, we're ready to help. You can contact us with a link that I'll put in the description below. If you find this video useful, please remember to give us a thumbs up and help us out by sharing it on your social media and tag us at Elevate Realty CA. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.